Hello everyone and welcome to Day Trader S&P 500. Today is Monday, February 5th, 2024. It's shortly after 6 a.m. Eastern. We have a rather massive update today. We're going to take you through, first of all, our video on demand, which is right here. As you can see there, we have Tesla, SMH, XBI, Bitcoin, and a bunch of educational and instructional videos and trading videos too. But let's get in that first with Tesla here. Okay, let me make this a big chart and expand this out. Okay, let's see if we can get that going this way. Alright, I want to show you guys first this, let's move this guy over. 5-wave advance way back here from March of 2020, the pandemic low where everything began. We have a 5-wave up pattern, beautiful 4th wave contracting triangle, 5-wave up pattern into the November 2021 high. We have an A down, a B up, and a C down, which was a perfect 786 retrace for wave 2. There you see wave 1 with a circle. There you see wave 2 with a circle down. From there we have a series of 1s and 2s to the upside. There's a 1, 2 in black. That 2 is an ABC. And a 1, 2 in red. 2 was a rather deep, almost again, perfect 786 retrace. Okay, this count is valid. Again, we always ask ourselves when trading or when charting, where is it wrong? Okay, so this 2 here is wrong if it goes below this 2. It cannot retrace more than 100% of the red 1. That is the red 2. So we have an A down, a B up, and that might be labeled this way. In retrospect, it doesn't matter. It's an ABC. But that's the second wave. We need to see a move up for this to be confirmed a bullish count above this red wave 1 high of 299.29. Okay. Right now this thing is hanging around 185. I believe that low there is about 180. Okay, so that's what we're looking at in Tesla. A series of second 1s and 2s and second waves that need to hold. This second wave would need to hold for this count, and this second wave with a circle would need to hold ultimately. Okay, so we're testing what would be resistance on the bullish count. Okay, let's get out of there and let's go to SMH. Again, this is on the video on demand subscription. We'll make this a bigger chart. Okay, let's get this into view here. There we go. And let's do this, make it a little better. Okay, so from the pandemic low, again, we have 5 waves up to wave 1 in November of 21. We have a wave 2 down here. Then we have a 1 up with a circle, a 2 down, a 3 up with a circle, and a 4 down. In our previous month, back here, we said that this 161.17 wave 3 high with a circle was the trigger point, and our targets were up here, and we actually have a direct hit on that. 195, 3 equals 1 at 195.04. and the actual is 195.90. That should complete the 5th wave with a circle. Again, we have 4, there's 5, and that's the larger wave 3. Okay, so that still could go higher to 203. That's the higher 1.618 multiple there, but we should get a retrace from here, and here is the red line. Retracement targets here in red of this entire 3rd wave. Alright, the first one is the 382 at 153. But we'll see how this goes. Could go higher. We'll have to watch it, but definitely a bullish count from the wave 2 low in October of 2022. Okay, that was SMH. Let's get into the 3rd one in our video on demand subscription, and that is XBI. Let me get this into full screen mode here. Okay, and we are looking at the move up. That was an ABC decline from that high back in 21. You can see there we've got a 1 up to 95.18. an ABC for wave 2 down here to 63.81. For this to be valid or validated to the bullish side, we need to move up above the wave 1 high at 95.18. That was back in August of 22. This low here of 63.81 should hold, and then obviously the 61.78 if this is to be bullish. You can see our wave 3 targets here, 97.72. That's 97.72. That's above the wave 1 high. We have a 1.272 at 106.94, a 1.414 at 111.76, and the 1.618 at 118.67. Okay, and that's it for XBI. Let's move on to Bitcoin, which is also in our monthly update video on demand. Let's see, we got it there. Okay, let's make that full screen. A lot going on here. A lot of direct hits on this, up and down. Little review there. We had a 5 waves up. If I can squeeze all that in, a lot of information there. Here we go. Let's move that over. From the pandemic low, March of 2020, we've got 5 waves up into November of 21. Does that sound familiar? All of these have the same. Okay. Then we've got ABC down. Again, a recurring theme, a near perfect 786 retrace. Okay, into the November of 2022 low. We have 5 waves up here in a circle to make the larger degree wave 1 at 31,818. We have a wave 2 retrace to 24,920. And here's where our wave 3 targets were. It had to get above wave 1. It did. First target was 41,274, achieved. Next one was 45,712. That was a 1.272, achieved. Next one was the 1.414 at 48,029, achieved with a little pullback. That could be the end of 3. The higher target is the 1.618 at 51,358. We'll see if it makes that one. We'll have to watch this pullback. Should hold above this wave 1 high of 31,818. And that is it for Bitcoin. Let's get out of that. And we want to go to some S&P 500 cash here. Okay, we're going to look at the, let's get that out of the way. Let's make that full screen. We're looking at a weekly. Okay, let's get that trading view to go away. It should go away on its own. 4th wave triangle from the January 2018 high to the March pandemic low was a 4th wave down to 2191. Let's look at the blue count first. We've got a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. Okay, and in blue we've got a wave 1, wave 2 down, wave 3 up, wave 4 down, wave 5 targets. You can see here, and it hit right on the 1.414, 49.75. There's a higher target at 51.89. That would be wave 5 up in the blue count, where wave 5 up is at the January 2022 high over here. Then we have an A down, a WXY up for the larger wave B, and C should terminate near the wave A low. Okay, so that's the black wave count. All right, both of those are in operation, if you will, and we'll see how that plays out. So either way, in the black count, the B wave should be its WXY up here, complete or nearly so, and in the blue count, I'd hit the obvious 1.414 Fibonacci extension exactly. There's a little bit higher one up there in 51.89. Okay, let's go from the weekly on the S&P to the daily. Okay, we're looking at from that A wave low. Okay, and this is the black count. We've got a W up, X down, and a Y with an A, B, C, D, E. Okay, you can see there so far the high is the 49.75 high, which was achieved Friday. Okay, you can see all of these open gaps. I think there's 11 of them. When C gets down to near the wave A low, these will all be filled, not retraced, but filled on the wave C retracement. Okay, so let's get out of that daily. We went from weekly to daily. Let's go to hourly. I might show you guys this on our report that went out. You can see here's a fib time spiral. You don't see it. By the way, yeah, there's the last gap at 49.24, but that's the gap down that it created. Okay, we had all those upside gaps. That's the first downside gap, and it remains open. But let me show you guys this in our monthly report, which is over here. And if I can get back here for a second. Okay, here is our video on demand, and then we have our monthly subscription right here. You can see we get more than one a month. We had a ton of them in January, but as market conditions warrant, right? So anyway, let's get back to that report here. Here we go. Okay, yeah, while we're on it, we get right here. The hourly on the S&P. Okay, you see the fib time spiral there, the check marks from where it began. It's been catching this low, this high on January 12th, this low on the 17th. We had a turn date of the 31st. You could argue that it hit dead on the 31st here, or it was one day off with the high here. Okay, that's argument of semantics at this point, because the next one is February 21st. So we'll see where that one goes. But if we can review on this monthly report. Okay, by the way, I want to mention Elliott Wave Hub, February 13th. I'll be speaking at 10 a.m. Okay, there's the link to register. Lots of free gifts. I think there are 8 different speakers. All of them have free gifts, including me. And you can click on it there. I'll put it down in below on the description. Okay, here's that weekly again with both counts, as you can see there. Okay, off of that expanding triangle, which we were the first to identify way back here around that wave B high. Okay, and then we've got that just explains there's a 49.75 that was hit dead on with the 1.414 multiple. Okay, here's that daily, as you can see, with the by the way, I wanted to tell you guys, I put this trend line down here connecting the low parallel up here, and here's where it just popped above that upper trend line, which is parallel to the lower trend line. We'll see that drops back below it. That trend line should act as resistance. Okay, so we'll see what happens here this week. Okay, but that's on the daily bar, and then there's that trend line, and here is the hourly there. Okay, so let's move. Yeah, I want to show you guys that time spiral. I think I got it there. Oh yeah, speaking of time spirals, this is the first one I did back in 1999. It started out as a daily. I didn't post that, but it was hitting on moves from this, what I still call it, what, 25 years later. The orthodox top was on August 24th, 99. Similar to what's going on now with the February highs. But anyway, getting back to this, it turned this daily into a weekly. And you can see here that for about 7 years, it caught virtually every high. And there's 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 7, 8. And of course, 55 plus or minus 1 or 2 days was the low off of that 824.99 high. That's why I did everything. So the market spun on Fibonacci spiral dates from that 824.99 high, even though the actual print high was on January 18th, or that week. I think it might have been the 17th or the 14th. I don't recall. But anyway, that's how these Fibonacci time spirals have served us well for 25 years. Okay, so it's spun off of that, just as on the ES, it's spinning off that one in December, even though the market has made new highs into February. We'll see if that works as well as this 7-year spiral worked. And then after that, we had the 2007 high, and then the market just crashed from there. Okay, so we go from there. There's our Fibonacci time spiral. Again, there's a beginning of it on 1228, but as you saw, it's spinning off of that and not off the February high as of yet. But we'll chart that too. Okay, We have our triggers and targets. We'll get into that, which we do on the E-minis, which is part of our monthly subscription. Okay, here's the NASDAQ. Okay, we've got the bullish count in blue. Again, 1 up, 2 down, 3 up, 4 down. There's 5 targets. Okay, it hit right in between the 1.414 and the 1.618 on Friday, which was the last trading day, and there's a higher target of the 1.618 multiple at 16,071 for the B wave high. Again, we've got an A down and a B up in black, and then we've got a 1, 2, 3, 4, 5. As you can tell, the blue wave count and the black both are complete or nearly so. So we'll see. The blue one labels a correction complete here and a 5 waves up, which will be corrected with 3 waves down. The black labels the high here with an A down, a B at a slightly higher high. Okay, that's the NASDAQ. By the way, as we mentioned months ago, in a bear market, there's plenty of divergences. You'll notice that the NASDAQ has not moved above the all-time high in November, while other indexes have. There's all kinds of divergences between the S&P cash, the E-mini futures, the NASDAQ, the Qs, all that stuff. They're not all topping the same, and they're not all turning the same, okay, which was typical of the market, the last couple markets. The decline in 2000, from the 2000 high to the 2002 low, they all topped on different days and they all bottomed. The NASDAQ leads on the way up and leads on the way down. The NASDAQ at the 2002 low had dropped 77.39%, where the Dow dropped 37% and the S&P 50%. And they all topped on different times. The Dow topped January 14th of 2000. The NASDAQ topped March 10, and the S&P topped on March 26. So there are divergences. It's normal. Okay, wave B up is complete or nearly so. Here is our Dow wave count. Okay, you can see it went way above the January 22 high, unlike the NASDAQ, which has not. There's your divergence. There's one of many. Okay, and you can see our targets here on the Dow and where it is right now. Okay, 38,783. And let's get in. By the way, those targets are the same for the alternate count in blue and the count in black. Okay, count in black, it would be the C wave to complete the larger wave B. The count in blue, it would be excuse me, the third wave. Okay, bond market. Let's go see if we can get that in on the chart. Okay, let me get to bonds here. Bear with me a second here. US 10-year, there it is. Go here and let's get that out. Make that a full page. There's a lot going on here. Okay. All right, we had 5 waves up into the October 22 high, which was a direct hit to the 1,000th of 1 point in a percentage measure. And we had a wave 2 down back in April. And then we had a wave 1 in circle up here. Okay, 1 of 5 waves up, and that was a direct hit within 0.2 or less than 0.2 of a point, or 0.8. Okay, then we had a ABC down. Okay, this is a relatively new lower low, which was made on December 27th. We have what looks like a 5 wave up pattern, but we got to see it play out. And of course, this 3.783 low on the 27th needs to hold. There's a lower target, the 786 retrace right there at 3.631. Okay, it went through all these, the 382, the 50, and the 618. Okay, we had a trigger over here at the wave 3 high for the wave 5 high, and target and hit right here in black. The next trigger, it hasn't happened yet, is a move above this A wave low will give us a trigger up here. Okay, I think I have that 3 equals 1 at 7.255. I got a smaller one too. Let me see. Again, this wave 2 low here has to hold. Otherwise, well, we got another one down here. Here's the 3.631, the 786 retrace down there. It could still hit that, okay? But then we look up here there is the 1 up with a circle, the 2 down with a circle, up here where 3 equals 1 in a circle, that's at 5.551%. So we gotta, see I gotta move these around because they keep changing when I change the scope, okay? But this trigger here will give us this target here, and we have a much higher target with 1 here back in October of 22, 2 down here, April of 23, 3 up equals 7.255. We should put that up a little higher because it is higher, okay? So as long as this low holds here, we're looking at a move to above the wave 1 high of 5.021% over to 5.51 and eventually to 7.255, okay? So we will see how that plays out. I think that's a little cleaner than our, there, it's all over there. It's the same exact thing, okay? There's our downside targets. You can see there was the low achieved. Where is it wrong? If this 3 here, this 3.253 does not hold, okay? And there's a 786 lurking below. I want to get into the gold market here. Okay, bear with me while I flip into that. And we've got a lot on here. We've got to really reshape this here. Okay, let me get this into focus. There we go. Okay, we've been all over gold. We've caught virtually every turn. We've been bullish for a long time, and it hit our long-standing target of 2147 within 21 100ths of a point. Okay, you can see our triggers and targets here. Looked like a triple top, but it came through and hit our target and becomes a downside trigger now, okay? So we moved to a short position on that day, and that was back in December 4th or 5th of last year against that high. As long as that high holds, here's our wave 2 retrace targets. From the 2015 low, we've got a 1 up, a 2 down, a 3 up, an A in red, B with a circle in red, C for the 4th wave, which was another direct hit, okay, and then we have another direct here and another, they're all over the place. Anyway, here's our wave 2 retracement targets here, okay. Let me fix that up a little bit here if we can get that on. Let's delete that there. Yeah, that's good. Put that there, that's better. Okay, so there's our retrace targets there. 1726. 0.49 is a 382 retrace. We have lower ones here. This is a wave 2. Okay, as long as that high at 2146.79 holds, then these targets are in play. Okay, let's get out of that and go back to our monthly. Okay, there is the gold market there. All right, 2147 within 21 100ths of a point, 9-year rise to within a day and 1 point of our target in terms of price. Okay, that is the downside trigger, and there's the verbiage of those retracement targets from our monthly. Now we're going to get into the ES here. Let's see if I can get that last report up. There it is there. That was from Friday, market close. Okay, again, here's the advertisement for the Elliott Wave Hub. Looking forward to that. That is next week, a week and a day from now. Okay, there was our wave 5 target. There was our wave 5 actual. This is a crowded chart because there's so much in here, but you can see the purple are the dates here, and that's that Fibonacci time spiral. Okay, I think the futures were off by a day from the cash. Again, a little divergence there, but you can see the purple dates and the black check marks where it hit these. All right, hit this wave 1 high, hit this wave 2 low here. All right, then we have the 130 and the 131. Again, argument of semantics, but see which one it is. Doesn't matter because the next one is 221 right here in red. All right, but you can see our previous triggers, and this is way down there. We had a upside trigger, I might show it on the chart, at 41.85 that was activated 3 days after that low, October 27th. And that, I think it's even more than that now, 812 point gain at $50 a point per contract on the futures. That's a pretty good gain. And then we got another one here at which was activated at 48.41 back here, okay, around the I think it was the 21st, 22nd of January, and that so far has produced 156 point gain, okay. The next downside trigger will be activated here. We get a move that goes below this wave 1 high of 48.38. That'll become the next trigger. We'll get the targets on that after it is activated. But again, a lot going on that hourly bar. There's that time spiral there. Okay, and there's the wave 2 down. That's all the verbiage right there. Okay, let's see if we can look at that in the chart if it's any better. Okay, there is that's the daily. Let's see if I can get into, yeah, here it is here, the hourly. Okay, here's all that stuff. It looks, by the way, there's another trigger down here. We can get below this low here, but the first downside trigger is here. But again, the last trigger was back in October, and here's that, what's not even on there. Okay, it's a bigger chart. Anyway, we haven't seen, we look every day on our monthly subscription. We give reports every day, and sometimes multiple times a day, sometimes even on weekends. But the last trigger we saw was here and here, okay, October 30th and January 19th. Every day on the way up, we look for a downside trigger, and we haven't had one yet. So like we've been saying for months now, since October, the last trigger is an upside trigger until we see the sign of a reversal, and we've got specifics that we show our customers. Until we get a sign of reversal to the downside, the trend remains up. So here we go. And you can see this hit right here. Let me make this, that's a little better, isn't it? Okay, there we go. And this is wrong. Okay, this should have been a 2 with a circle around it. I won't bother you guys with putting that circle around it there. Okay, but that is the wave 2 targets there. I show it on the chart that went out to subscribers, okay, and that was our target there. I'll get back to that. Here's our downside targets for wave 2. If this is wave 1 up, 5 equals 1. It came close. It still may hit it. Okay, we'll see how that plays out, but let me get back into the report here, and there is the monthly, and I think you got that. Yeah, we've got wave 2 retrace targets there, and that is a 5 waves up, 1 in parentheses, 2 in parentheses. That's gold. Hello, we got into the wrong report. My apologies, guys. Here we go into the hourly. Yeah, there's the 1 up. Okay, 1 with a circle in red is equal to the 1 up right here on 111. In parentheses, the 2 down on 117, the 3 up on 130, the 4 down on 131, and so far the 5 up on 2-2, which was Friday, where 5 equals 1. It came within less than 5 points. It still could hit that target. Okay, but again, we're looking at from wherever the wave 1 high ends up or is. Wave 2 targets are here from that wave 1 high of 49.97.75. And again, if it makes higher, a higher first wave with a circle around it, then the second wave targets will change a little bit higher too. Okay, that's it for the massive update on February 5th, 2024. And until next time, take care, everyone.